Metal Bulletin's Asian Bauxite and Alumina conference was told last week that Chinese aluminium production will reach 24 million tonnes this year, an increase of 10% over last year. This will more than account for the production cuts made among some Western producers over the last 2 years. It is all very well cutting production to try and bring prices back above the marginal cost, but if global output actually rises despite those cuts, then it becomes a pretty thankless task. United Co-Rusal has cut more than 320,000 tonnes of aluminium production in 2013, or about 8% of its total output, and recent closures of capacity from Alcoa and Rio Tinto, among others, have seen production capacity among Western producers fall substantially over the last 2 years. But production growth in China, as well as the Middle East, has seen global production increase over that time, and prices have fallen further below production costs. Producers still maintain the price outlook is a very favourable one. Demand is expected to reach 80 million tonnes per year in the next 10 years, from around 45 million tonnes per year today, and not even production in China is expected to grow at that rate. Additionally, Rusal's deputy CEO Oleg Mukhomedchin said in a recent call that China will essentially have a balanced supply picture in the next few years, so it will have little impact on supply and prices in other markets. With no new major production projects to come after the completion of Ma'aden and EMAL's second phase next year, Mukhomedchin expects the aluminium market outside of China to move into significant deficit over the longer term. At that point, demand will start to eat into the vast aluminium stockpiles, and when they're gone, prices could finally move back to some semblance of profit for the majority of producers, possibly towards the end of this decade. No doubt many of them will then start to look again at the potential for new projects and expansions.